Hey guys, this is a market update. In this video, some data from Glassnode showing us why this 30,000 level is really the perfect equilibrium price for Bitcoin right now in terms of where we are in the cycle. We're going to look at this data showing us how, supply and demand is essentially perfectly balanced at this point in time, moving out of a bear market into a more profitable scenario, but definitely not the peak of the bull market, of course. And we'll see, where we are in the cycle exactly. So I'll go through that data in this video. Coming to BTC right now, a very typical rejection off of this support and resistance level, which is to be expected. Why is this 30K level so key? From a price perspective, it is, but also from an on-chain perspective, looking at Glassnode's data, it's just showing us that this is exactly where, buyers and sellers are meeting at this point in time. Supply and demand is obviously very key to the price. This 30K level, I'm sure we're going to bounce around it. Like I said in previous videos, what we actually want to see is where is the low after this impulse. So we had this first impulse from the low, and then the kind of banking crisis drew us lower, but then obviously we went through a new impulse here as demand came back in for Bitcoin. This impulse is great, been rejected off of this higher level right here, which again is normal. Now we want to understand where is the rejection of this latest impulse, where is the low? As long as the low comes in higher, then you're in an uptrend, right? And so anything down into this zone right here, 28,500, 28,000, even down to 27,000 is still within that uptrend. And so I believe that after such a big impulse, you're obviously going to get a little bit of profit taking, and Glassnode show us that as well. So we'll get onto that data. If you are a trader, deposit bonus on Bybit, link in description, up to $4,000 there. Check the details via that link. The Bitcoin halving is 1 year away now. And so if you're trading Bitcoin, then that really is the swing trade to be trading at this point in the cycle for that year away. 12 months away, that is still a short-term trade if you're looking for that. And so, where are we in the cycle? Are we overdone in terms of where we are in this part of the cycle? Have we overdone things? Do we deserve a much bigger pullback, or are we about equal and balanced? From the data that Glassnode show us, we're actually really balanced right now and very similar to every previous cycle. It's very, very predictable and almost too predictable that you think, well, it can't be this simple, but you can see this is NUPL, which is net unrealized profit and loss. Now, if you are an investor or a long-term buyer, then obviously the red zones down here, when the net unrealized profit and loss is obviously showing a much bigger loss, they are, if you believe the secular growth of Bitcoin, it's just a network that is generally growing over time, which is the case, that is a true statement, then obviously when prices draw down, they are times where you get in and invest if that's suitable for your needs. So as we can see here, we are right at this level right now, which is basically equilibrium with 55.8% of percent days above. So NUPL, net unrealized profit and loss, current reading of 0.36. The market is a very neutral level. I think it's important, right? So we're at a neutral level now. So we're not overdone. We're not in a bull market. It's not time to let go of your coins if you are more of a long-term or medium-term holder. Now, obviously, there's been some profit taking from these lows from short-term holders, which we can see as well, which is obviously very natural. To make 100+% in a few months is obviously extremely good as a short-term trade. But if you're a long-term investor, you can see here, we are still at the bottom end of the cycle, moving out of it now. So again, we're not in the drawdown phase anymore. You can see NUPL, we have had that drawdown. We've had the big drawdown, the losses that have come in, but we're climbing out of it now, still in the bottom half of that zone. But you can see even if we are climbing up further, it doesn't mean the price is going to then, stall out. The price can still continue to rise and more people in profit over time. But for right now, we're not overdone. We're about at equilibrium where, longer term buyers and sellers seem to be finding a price level. Also in this Glassnode report is what they call HODL waves, or realized cap HODL waves. Again, it's just showing us cycles and distribution of coins, speculation of coins. So this previous cycle, the drawdown has been one of the longest on record. So usually Bitcoin drawdowns, happen, maybe take a year or so. This one has taken amongst the longest of the drawdowns in terms of at what they call HODL saturation or hodler saturation. So during each drawdown and the bottom of a bear market, and where you find that zone of pretty much buyers are coming in to actually say, what, this is just where we're going to be buying right here. And eventually buyers start to take over sellers. you have this bottom zone, this hodler saturation zone. Now, what you can see here is spikes in coins spent, short-term coins spent. So during the peak of each bull market, you have this retail frenzy that comes in, and you have this spike, what they call speculator saturation. So during these spikes, it's obviously when you should not be buying at these points, right? And of course, a lot of people do buy at this point because it's new entrants into the market who are speculating and FOMOing into the price. But if you're a slightly longer term investor, then obviously taking advantage of the bear markets is going to give you the best returns there. And during these speculator saturation events, you can see that obviously there's a lot of speculation. Short term, a lot of coins are being spent and traded over time. And that's when, you can maybe take profits if you have bought coins much lower down, or if you're just an ultra long-term investor, either just don't buy them here and wait for a bit of a drawdown, or just buy less. That's up to the individual investor. As you can see on this cycle right here, we had a very, very large drawdown and hodler saturation here where coins spent came right down. That is a very typical bear market, but the important thing is here is that it's just starting to climb up again. And we've seen that with the climb out of every bear market here, where you see the speculation start to come back in. It's slow and steady, but you can see it start to come back in. And that's obviously good for the feed through into the next halving, which is in a year's time, which is actually where you get that explosive speculator saturation event around the halving, just after the halving, going into what has usually been a new all-time high. Another chart from Glassnode, this time posted on Twitter by Will Clemente. This shows each of the halving cycles around 4 years or so. So Epoch 1, the orange line here, the first halving cycle, and then 2, 3, and 4. First thing to note here is that each cycle is having diminishing returns, right? So the first halving cycle around 20,000% return. You just can't, it's impossible to do that now because the nominal dollar value of Bitcoin is so much higher now that in percentage terms, you just can't get that. However, as you can see here, this is day 0 after the halving. Each halving, when it occurs, has been the catalyst to that kind of blow off top all-time high whenever that comes. Each one much lower than the last though. The last one around 500-600%. What would be getting this time? Well, as you can see on this chart, I post this in the crypto investor course groups all the time. This is just a standard deviation either side of the logarithmic regression of the growth of Bitcoin in price anyway. So as we can see here, what we'd be looking at is a 90+% move from the lows during this part of the cycle. That's already happened, and then potentially something like 100-300% around there, which would take us to a new all-time high. But we have to assume at this point that as Bitcoin matures, the percentage gains are going to be less and less, but you also get something else, which is slightly more steadiness and security. Even though we got a 70% drawdown this time in the bear market, each of these successive drawdowns from each bull market has actually been lower in percentage terms as well. So the asset is maturing, still extremely volatile, but you need that volatility to get some of the upswings as well. And like we see here, it seems like this is starting again. The cycle's starting again, and we have 1 year to go until the halving, which is when, as you can see, each of the previous occasions, we've had this bottom formation, some speculation starting to return, then the halving, and then the rise to a new all-time high. And let's hope it happens the next time as well. So both the on-chain data and price data is showing us that speculation is starting to turn and the bull market is starting to turn as well. And actually more traders are getting into profit. That's a good thing because a bull market is when everyone's in profit essentially, but you can use that to your advantage if you've been accumulating at lower prices. If you want to take profits or if you just want to hold, it's up to you. We cannot continue on this trajectory just up in a straight line. It's absolutely impossible. We do have to consolidate at least or find some price levels here. And so that's very healthy. The real blow off top is not going to be till after the halving if the cycles continue, and there's no reason to suggest why that isn't, because the macro, we're still going through a fairly poor period right now, and maybe next year would be the actual bull market once the recession and everything is out of the way. So everything looks to be on track, in my opinion anyway. If you are a trader, deposit bonus on Bybit, link in description for that. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.